I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending May the 10th, where we had one wet week. I tell you what, especially in the southern half of the United States, it started moving up north and east after it got past the Mississippi River. But I tell you what, Texas, South Texas, Central Texas, flooded. I mean, just unbelievable amounts of water. Even getting big rains in the driest parts of the country. Oklahoma, West Texas, Texas Panhandle, New Mexico, get up into Kansas, big flooding rains up in Kansas. You know, I thought it was ironic that I-29 just south of Omaha and Council Bluffs had been closed ever since the big floods up there for over a month. It actually opened back up this week, and then I-35 ended up being closed south of Wichita, just between there and the Oklahoma border, and that's kind of unheard of. But just flooding rains moving all across. Then it got over in the Mississippi Valley and into the southeast, and they really didn't need it. And then moved up through Kentucky and went up and soaked the northeast and ruined yet another weekend in our high population areas when we need those this time of the year. Those people have cabin fever and they would really like to get out and enjoy their backyard grills, which would definitely boost our beef demand. But just wet everywhere. Our corn planting is way behind. You look at the most popular states that grow corn, only 23% of the crop is in. That is about half of normal. So they're way behind, but don't get too nervous about this corn going up. We've got so many good products out there now, and they've got short-term corn that they can still get in. Moisture is always your limiting factor, so we've got plenty of moisture there. I realize there's some areas in that flooded country up there in Nebraska that are not going to be able to be planted this year, but if you look in the whole scheme of things, that's not going to make a big difference. And if we got plenty of moisture out there, we get along a little bit and things get dried out a little bit where they can finally get to work. If they get a few days where they can get in the field with the kind of equipment they got now, whenever they unfold those big planters, it doesn't take very long. And I would look for another big corn year out there. But you look at the biggest news late in the week is the China dealings with them and the import-export trade with China. Those deals fell through late in the week. China tried to change the rules through there and some of the intellectual stuff that they're stealing, the technology that they're stealing from us. The earlier negotiations, they had changed all the rules on those when they came to the table to deal late this past week, and that wasn't going to work, and so they don't think Trump has the balls to do what he needs to do, and he's going to do it. He's got their feet right up to the fire. He's holding them there till he starts to smell the flesh burn. And it's going to hurt a little bit, guys. And some of you guys that don't have the stomach for it, you probably can't root for your favorite football team all the way through the year if they're not making the playoffs and winning every game. No, you got to stick with them. He is going through the rough part of it now, and then what did he do? He realizes what he's doing. He knows that it's hurting agriculture. He knows it's hurting our row crop farmers. And so what did he say he will do? He's going to take some of that tariff money, as much or more of it than trade we were doing with China, and he's going to buy ag products and send it to places that need it. And that's exactly what we needed. It didn't keep your grains from dropping a little more late in the week, but it did stave off the pressure on cattle, and it was kind of time for cattle to pop back, and cattle kind of bounced all week because we say that they're oversold. Your technical analysts say that your cattle market is oversold. Your cash sure doesn't think so, because cash continues to bleed as it keeps going lower and lower. And I've said many times that your cash can't turn around on a dime like your futures market can with the algorithms and the computerized trading. And it's going to take quite a bit to get this cash market to stop bleeding back. Although some of your later week sales did show that there might be a little bit of solid footing as we work into this week if we can keep the board from dumping and causing more bearishness on the market. But let's look at the board for last week. June live cattle futures, Monday was down $1.15, Tuesday was unchanged, Wednesday down $1.20, Thursday up 87 cents, Friday up 50 cents, ending the week at 112.45. Your out fronts gained a lot more ground on Friday than your nearbys, so that was kind of positive. August live cattle futures ended the week at 108.90. So well under that 110 that we thought would be the floor on those summer contracts there. May feeder cattle, Monday was down $1.12, Tuesday up $1.27. It was kind of bouncing. Wednesday down $1.52, Thursday up 47, and Friday up $1.37, with your May feeder contracts ending the week at 137.60. Your August goes out there at 146.82. Your fat cattle trade was all about the basis. They started trading once again here all spring during this down market. We've been trading early in the week. Your packers are hungry for cattle. They're stepping up this slaughter and they need the cattle, and your sellers are more than anxious to give them to them at lower prices because the board's been down and they have an opportunity for a basis. I talked about it early in the week there. We had some cattle sell middle of the week in the Northern Plains at 122. Okay, that 122, if you look at the June board, which is our spot market right now, it was sitting around a little 112. So that's a $10 basis or more. You tack that onto that 22, that's 132. That's the best trade that we've seen all year, or all calendar year so far this calendar year. We topped out at about 130, 131 on a few loads there. Never saw 132. Well, the hedged feeders that are selling those cattle, they're just looking at that basis. The basis is the difference between the cash and the futures price. And as long as you have a positive basis where your cash is ahead, well, you can gain some ground there. And it's all with your risk management schemes there. But that's why we keep losing this market position so fast, as people keep jumping at that basis, which it's all good and fine as long as they're making money, until they paint themselves into a corner where they've worked the cash market so low, and that's continued to erode the futures market. Then we get it so low and so low out front that you can't buy any feeder cattle that'll hedge, and that's where we're getting right now. And we're just seeing everything just dump on here as your hedged feeders jump at the basis. But you know, over 3/4 of our cattle feeders are hedged. You have to be that way anymore. And we're the only industry that bets against itself with every crop. But that's what it does. But you look at your cash market, your negotiated cash market in a 5-area feeding region through Thursday had already sold 107,800 head with very minimal cleanup trade on Friday. But we'll find out early this week about what all's finished up and where we were at with the total negotiated trade and what our weighted averages are. But through Thursday, you know, we saw trade from 118 up to 122. 122 was the extreme top in the Northern Plains. Your Southern Plains traded on Tuesday some, and Wednesday at 120, which was $3 lower. Then on Thursday and Friday it got into 119, 118. That ended up being $5 lower for the week in the Southern Plains. But with a spread on live steers and heifers from 118 to 122, your live steer weighted average price in your 5-area feeding region through Thursday was 120.40. That was down $3.36 compared to the previous week. And your dress sales had an even wider range. Big spread on those. We saw some 195 early in the week in the Northern Plains, and then it started backing up to a lot of 192, 193. Then we saw a lot of quotes from 185 all the way down to 185. That was more for late month trade. I think maybe the lowest we saw was some 188, very tail end of the week, which is still terrible, but a lot of 190, 192 later in the week on your dress sales. But In your 5-area feeding region, dressed steers had a weighted average price through Thursday of $192.42. That was down $6.54 for the week, but just eroding this cash market, and the market position is tanking every week here. We just continue to lose it, and where it's going to stop, who knows. Box beef cutout values dropped big time. These are average trades for last week. Your average trade, not at the tail end of the week, but for the whole week, your average trade on choice cuts, $223.49, down $6.78. So the packers are taking it off too. Your select average trade for the week, $209.57, down $6.79. That's a choice select spread of almost $14, but huge movement at the lower price levels, and we got to keep this product moving. And your box beef cutout values are not unlike your fat cattle sales. We don't see near as much on the spot market as we used to. A lot of it is done out front, contracting and things like that. It's really harder to get the market, but 740 loads of cuts, grinds, and trimmings, that's impressive movement. That was a good movement, and they are getting this stuff through the back door about as fast as they can. Your slaughter, 664,000. That's a good week. Not as impressive as the previous week at 670, but down 6,000 for the week, up 9,000 compared to the same week a year ago. And a year ago we had great slaughter levels, but we are beating them week in, week out. Why wouldn't they? These packers are absolutely making money hand over fist. Year to date, already we're up 1.3% over last year. And last year we ended that week up 2.5% compared to the year before that. So we are really getting rid of this glut of cattle. We're going to have a lot of market-ready cattle ready this summer. The market's going to be tough on them, but if we continue to move this product and have good demand, we'll be able to work through it. Look at our feeder cattle markets. Real-time index on Cattle Market Central ended the week at 133.96. That was down $6.20 compared to the end of just the previous week. That is a ton loss there. But you think that RTI is a 7-day moving average, just like the CME index, and we had a lot lighter volume in your sale barns, a lot lighter this past week, but we lost all those high prices. The market's been down so long. In that 7-day moving average, we don't have any of those high prices that we had there before, and we've gotten in there now where we're settled in more where we're at. I wouldn't expect to lose a whole lot more. We've lost nearly $13 in the last 3 weeks on your real-time index, and that is a ton whenever you're talking about an 800-pound steer is what it's based on. But cash feeders in your auctions, all classes, week to $5 lower. Of course, there was instances more than that, but that caught most of them. You're week to $5 lower on both calves and yearlings, and not any old crop stocker cattle really left to sell. But I got several different individual quotes late in the week on Friday. Kind of shows you where the market's at. Talk about some cattle coming from Mexico, imported at Santa Teresa Livestock Auction. These are Mexican cattle, okayed to enter the United States through that auction right on the border. But 82 head of 340-pound steers. You think that's awful light? Most of your crossings at the border coming from Mexico into the United States are based on a 300-pound steer calf. So that's pretty close to what your base is. But 82 head of them weighed 340 pounds at Santa Teresa Livestock Auction, $191. So they're still dollar up by the head. But you got a lot of opportunities to cheapen those cattle up when you turn them out this summer. Move up, higher up into the country, step over east and talk about more of a feeder weight steer. Lake Cumberland Livestock Market in Somerset, Kentucky. 62 head of 831-pound steers bring $133.75. That's an impressive quote for anywhere in the United States this week, especially out in Kentucky. Now we talk about some big heavy steers at Wahoo Livestock Sales in Wahoo, Nebraska. some big steers, 102 head of 996, or you might as well say 1,000-pound feeder steers, bring 124.75, quite a bit better than your fat market, and you can put it on cheaper than that. That's a look at your week's markets from a home DV auction office here in Canyon, Texas. We'll talk to you next week.